Thank you for joining us today. We're just going to give it a minute so that everyone can join us from the waiting room and then we'll get started. All right. Hi, everyone. Welcome to today's webinar. Today's webinar is on land banks and tax delinquent properties. Our speakers will be talking about the opportunities, challenges, and best practices on the subject. Before we get started, I just want to quickly talk about the Housing Alliance of Pennsylvania. We are a statewide coalition working to increase access to safe, decent, and affordable homes for all Pennsylvanians. Webinars are free for members, so become a member today. You can do this by visiting housingalliancepa.org/become a member or contact us at info@housingalliancepa.org for more information. We move on to the next slide. All right, so our webinar will run approximately for 60 minutes, and that includes time for question and answer. We encourage you to leave questions for our incredible group of speakers here today. If you do want to ask the speakers a question, please use the Q&A function. The chat function is only to ask the Housing Alliance staff logistical questions about the webinar. So once again, please use the Q&A feature, which you can find at the bottom of your screen, to ask questions to the presenters. We will email you a recording of this presentation and any associated materials in approximately a week's time. All right, next slide. Quickly just going over some Housing Alliance events that are coming up. We have the Protecting Federal Funding meeting on Monday, October 20th from 12:30 to 1:30 p.m. You can scan the QR code on the screen to register for our Protecting Federal Funding meetings. We also have our annual Homes Within Reach conference, which will be held from December 3rd to December 5th at Hershey Lodge in Hershey, Pennsylvania. Registration is now open, so join us for our 21st annual conference. You can do so by scanning the QR code on the screen. It will take you right to the registration page, but you can also use that page to look at some of the sessions that we have and other programming details for the conference. With that, we should get started with the webinar. Please make sure to leave questions to our speakers, and I do want to thank our moderator Winnie and our speakers Mandy, Frank, and Matt for joining us today and sharing your experience with our audience. With that, I'm going to stop screen share and I'm going to pass it over to Winnie.
Okay, hi everyone. I am excited to be here today with you all, and I am excited really to have this conversation with our panelists because they are incredible experts that we want to get to them today with our questions and our thoughts about opportunities, challenges, and best practices that are presented through the ability of land banks to acquire tax delinquent properties. So I am joined today by Mandy Culhane, Frank Demore, and Matt Kreis, and I'm going to ask them to give a brief introductions of themselves. For me, I'm Winnie Branton. I have worked for the past 10 years across Pennsylvania doing training and technical assistance with local governments and nonprofits on all kinds of blight strategies, including land banks. So I'm happy to be here today. Mandy?
Hi, good afternoon, everybody. I am Mandy Culhane. I'm an attorney at the law firm of GRB Law in Pittsburgh. We do delinquent tax collection work under MICDL for dozens and dozens of taxing bodies here in Western Pennsylvania and also the city of Philadelphia. I've also more recently been working with our local land banks here, Tricog Land Bank, Wilkinsburg Land Bank. We're doing some work with the Pittsburgh Land Bank now. And we've also represented the Philadelphia Land Bank in some litigation related to the properties they own. So it's been really fun to watch the transition. We still do a lot of tax collection work, but it's been really fun to watch the transition to seeing how these statutes can also help land banking.
Thanks, Mandy. Frank?
Hi, my name is Frank D'Amore. I'm an attorney in Allentown, Pennsylvania at the law firm of Fitzpatrick, Lentz and Buba. The firm and myself represent the Pottstown Borough Land Bank, the Allentown Economic Redevelopment Authority, and I, in my private practice, tend to go all over the Commonwealth for various issues that arise under one of the statutes we'll be talking about today, the real estate tax sale law. I've also done past work with housing authorities, and there's actually through some of their development, you touch on blight a little bit there too. Thanks.
Thanks, Frank. And Matt?
Sure. Thank you so much, Winnie. Appreciate it. My name is Matt Price. I am the general counsel for the Center for Community Progress. We're a national nonprofit. We work with a lot of communities, both in Pennsylvania and across the country as well. Work with a ton of land banks all over. We created the National Land Bank Network. And we get to work with everybody on, do you need a land bank? Do you want to create a land bank? How are you tied into the property tax foreclosure system? How are you working with your local government? All kinds of fun stuff, and really excited to learn from everybody on the call today.
Thanks so much, Matt. So here's what we're going to be discussing today. Just first recognize that there is a strong correlation between tax delinquency and blight. We also want to acknowledge that land banks have been given special powers to acquire tax delinquent properties and return them to productive use. And that is really the power that drives most counties and municipalities to want to join or form a land bank, and that is the priority bid power. So today we're going to talk a little bit briefly about how land banks can acquire properties, how tax sales work in Pennsylvania, and then we're going to show you some examples of how land banks have acquired and repurposed properties through the tax sale purpose. And then we're going to talk a little bit about best practices and risk reduction and efforts underway to protect vulnerable homeowners from to keep their equity. So thanks for joining us today, and we look forward to conversation and to your questions. So for those that aren't familiar with land banks, just a couple things to remember. It's a governmental entity. It's created locally by ordinance, either at the county or municipal level, and it has certain unique powers to address and return to productive use vacant, abandoned, and tax delinquent properties. And those properties should be returned to use that matches up with community goals. The next part of this is just, again, a refresher for those who are familiar, but land banks work by acquiring title to problem properties, as I mentioned, vacant, abandoned, and tax delinquent properties. In Pennsylvania, we often refer to them as blighted properties or tax delinquent properties. All those terms are within the definition of what I think of as problem properties. They also have powers to eliminate liabilities like liens and tax claims and clouds on title that keep that property stuck in the market and unable to be transferred in the normal course of real estate. And then lastly, land banks can transfer properties to new owners that they choose based on criteria and policies that they establish. And they transfer those properties to new owners in a way that supports the local needs and community priorities. Again, land banks are locally created and community driven. So I mentioned the unique powers of a land bank, and we're focusing today on that highlighted one, the ability of the land bank to acquire judicial tax sale properties at a low cost with using their priority bid. The other two unique powers go to an expedited quiet title process under the state land bank law, and then again, that ability to discharge liens and claims on property with an agreement of all the taxing bodies. The first power, the priority bid, is something that redevelopment authorities don't have on their own. And you'll recall from the land bank statute, land banks don't have eminent domain power, which redevelopment authorities in Pennsylvania do have. So the state land bank law, if you see the blocked print up there, it really says that land banks can acquire properties or interests in property by any means, and in a manner that the land bank considers proper. That is a broad authority for acquisition. So if you look at the statute, you'll see that land banks can acquire properties through gifts, donations. They can buy properties. They can on the market just like others do. They can approach owners who maybe own blighted properties and say, hey, would you consider transferring or donating this property to the land bank, or would you even consider selling it to us? They can also acquire through tax and mortgage foreclosure by transfers too. Under the state land bank law, municipalities, redevelopment authorities, and tax claim bureaus can simply transfer properties to land banks if they want the land bank to be the entity that manages, maintains, and then transfers out those properties to new owners. The most common property acquisition tool for land banks in Pennsylvania is by judicial sale using the priority bid. Now, the Center for Community Progress does a national land bank survey every couple years, and they just finished their survey and released it for 2025. And in that survey, I was looking at the results this morning, and I believe over 50% of the acquisitions nationally at land banks are through some kind of tax sale process. So I encourage you to take a look at that national Land Bank Network survey. You can access it through the Center for Community Progress's website, and it can give you some interesting data on land banks, not only in Pennsylvania, but across the country. So tax foreclosure, oh, this is where Frank, I think I'm going to hand it off to you now, and you're going to tell us a little bit about the tax sale processes under Retzel. So Frank, if you want to go, and I'll advance the slides as you direct me.
Yeah, sure. So just a quick overview for those of us that might not know. The way we collect real estate taxes in Pennsylvania is just ad valorem. All that means is it has an appraised value, and that's what the tax is based off of. So you have to pay those every year. Some people forget that, but it has to be given to the school district, the county, and the municipality. And the main way to collect those taxes when they go unpaid is by using one of the two statutes that are here on the slide. I am most familiar with the real estate tax sale law. Mandy will talk a little bit more about the municipal claim and tax lien law. But the similar processes, if I had to give you a real quick difference between them, it's just that the real estate tax sale law is more centralized. Municipalities give up their collection rights to the county, so it's just sort of easier. Places like Philadelphia, larger municipalities will still use the municipal claim and tax lien law. It gives them more control. Exactly what is on this slide. Yeah. Yeah. And just the final note that I put on there. Yeah, it gets confusing for me sometimes when a school district may use the municipal claim and tax lien law, and the county and municipality maybe they use the real estate tax sale law. So a property can be sold at a real estate tax sale law sale for taxes that someone thought they had already paid to the school district or something like that. Why do some municipalities and school districts opt for collection under MICTL rather than Retzel? I would say that some of them just want to have more control. The MICTL process sort of works like a lawsuit. You have to proceed through it, you have to get a judgment, then you have to execute on that judgment. And that's all dictated, the speed in which that's dictated is done by whoever's running that lawsuit. Retzel, at the end of the year, if there's the delinquent taxes, you send it to the county, and then you sort of, it's out of your hands at that point, and you just hope they did everything they need to do. It makes sense to me that larger municipalities, Philadelphia, for instance, would use MICTL. It's the boroughs and the small ones I see that are still using it that I don't quite understand.
Thanks, Frank.
Yeah, I guess this is my slide. Yeah, I would say that most counties, so most most counties follow Retzel. And as I was sort of alluding to before, you got Allegheny County, Wilkinsburg, Philadelphia. These are all larger counties that would probably want more control over the process.
Yeah, and in Pennsylvania, you can see we have 39, almost 40 land banks, and really the majority of them are in Retzel jurisdiction. So it's important to acknowledge that because of the statutory language in the Land Bank Act. I'm going to go to the next slide, Frank.
Yeah. So this is a good representation that Winnie's provided. It says specifically to Schuylkill County, but it applies to every county. It's a statute of statewide application. This is the process if there was a property that's going to be sold for pursuant to Retzel. For instance, this year, if delinquent taxes are unpaid for 2 years, they can be subjected to the first step in this process, which is an upset sale. So that sale usually happens in September. It has to happen before, I think, the third Monday in September. And at that sale, it'll collect taxes that are 2 years past due. So this year would have been 2023 taxes. It gets exposed for something called the upset price. The upset price is the taxes that are due, but also, and this is sort of how Michtel and Retzel work together, any what I tell my clients, any public debts. So if, for instance, under Michtel, you filed a curbing lien, or water wasn't paid, those things can be included in the upset pricing and collected at the upset sale. So at the upset sale, the only thing that's being discharged is public liens, is how we should think about it. So mortgages, judgments, things like that, those are untouched. So if someone's buying a property at the upset sale, then they're buying it. I always tell them, you're buying the cart and the horse. So you're buying it subject to a mortgage. That's your decision. So a lot of properties don't get sold at an upset sale. They'll move on, and there can be a private sale, as is indicated on this list. I find that very rare. Typically, what happens is the County Tax Claim Bureau, who I should have explained before, is the one that's set up to actually run this process, petitions the court to take these properties that didn't sell at an upset sale and to sell them at what is called a judicial sale. Colloquially, it's referred to as a free and clear sale. It's not always true. Ask the IRS. But generally speaking, at the judicial sale, a property will be sold free and clear from all encumbrances. So any mortgages, things like that. That's, for instance, the first time a mortgage company will get notice of a sale, because it's the first time that their interest is actually at risk. That's where, if a property makes it to a judicial sale, that's where you will find the most competitive bidding in my experience, and that's where the land bank can use its superpowers. If it's not sold at the judicial sale, it moves on to something called a repository list, and what I'll say, more developed counties, the repository list is typically land that doesn't really have a value. Maybe it's encumbered with significant easements, or maybe the zoning is prohibitive, or it's too small. Sometimes it's just a stormwater swale, or just property that'll just sit there for years and years. But it's a list. The Tax Claim Bureau actually takes title to the property, holds it in trust, and can sell it to somebody interested in buying it for, usually the minimum bid is $500. Though again, in the closer you get, the more populated, larger counties, the quality of the properties that'll be on the repository list are very, very poor.
And just to add a note on this chart, I was working with the Center for Community Progress in Schuylkill County as part of their hazard mitigation planning process, and blight was an element of that plan and process. And the idea here was to highlight that, we want this process to be efficient and effective, and acknowledge that time is really the biggest threat. The longer the property sits there, the more it deteriorates, the less value it has. And you want to try to move these properties into new owners' hands as quickly as possible, while still protecting and making sure that the owners have full notice of what's happening with the property.
And I would assume that's why the policy changes are here on the side.
Yeah, we examined some of the policies up there to try to figure out how, especially local governments, could have a greater period of time to evaluate the bidders that registered back, I think in maybe 2016 or 2018. The law changed that required bidders to register for these sales. And with that registration came a responsibility of the County Tax Claim Bureau to share the registration list with the local municipalities where the properties were located that were going to sale. but the period of time given is so short that many municipalities don't have time to review it and see if anybody on the list has a revoked landlord license or a history of serious code violations in the municipality, where they can notify the tax claim bureau and say, these folks are ineligible to bid, and please don't allow them to bid on any properties. That was really a great advance, thanks to parties like the Housing Alliance to advocate for that bill change, so that municipalities have some greater say and control over bidders that come in and seek to acquire these properties at very low cost at judicial sale. I'm going to go.
Yeah, and what I'll say about the suggestion here is that I see a lot of counties, it is much longer than, not much longer, but it's longer than 21 days. They'll give them a month or a month and some change.
That's good. So on this next slide, Frank, I just put in the statutory provision that talks about delinquent property tax enforcement in rental jurisdictions. I don't know if you want to go over this or go on to the next slide where it's broken down into like regular people's language.
Yeah, why don't we move on to regular people's language?
Layman's terms.
Yeah. Yeah, so yeah, I can speak to this as well. So the typical process for a judicial sale is that it's competitive bidding. You either register online, you go to the local, college, wherever it is, you show up and you're bidding. It's an auction. The superpower, as we said, is that not the land bank can just come in and, using the priority bid, just negotiate directly with the tax claim bureau to for a sum that is acceptable. So they can get, usually it's blighted properties, but they have the opportunity to purchase these properties at judicial sale for and just skip what, for a fraction of what they may have been sold for originally.
And for land banks in Pennsylvania, this happens before the judicial sale. It's already arranged, and there's no need to participate in the auction itself because those properties have already been named for the land bank.
Right, they're actually taken off the list once something's agreed to.
Okay. And then that little note at the bottom goes back to what Frank said earlier. Some land banks are filing quiet title actions on every property that they acquire at judicial sale, just because there's a possibility that perhaps all the lien holders or anybody with an interest in the property was not notified. So this quiet title action results in a judgment that says you are the only owner of this property and you have free and clear title to it. So that sometimes is needed if you want to get title insurance following your acquisition of the property.
Sure, and the land bank law provides an expedited process to do so.
Okay, I'm going to turn it over now to Mandy. If you want to take over here and talk about MICTL, please.
Sure. Okay. So in the Land Bank Act, there are in section 2117, it's broken into different sections, whether you're under Retzel, MICTL, or the second class City Treasurer Sale Act, which is Pittsburgh. So the priority bid language, that's a term we hear, we're talking about today and we hear all the time, is in at least under the MICTL procedure under this D4, which just basically says if the land bank tenders a bid at the sheriff's sale, then it's deemed sold to the land bank, regardless of any other bids by other parties. And these properties are identified ahead of time for the sheriff's sale. They're not taken off the list, but they are held to the end, and then the land banks, at least in Allegheny County here, the land banks bid on the properties and acquire title that way. I think, Lenny, you have any questions on that? Okay, so I've already talked about how MICTL is available to everyone. And in our experience, well, everybody can use it for their municipal claims. So I guess theoretically, there'd be a situation where the real estate taxes are paid, but there are significant municipal claims for demoing a property or curbing, like Frank had suggested. So if Retzel's not an option, then Mictel might be an alternative to pursue land bank acquisition on the municipal claims. And we also have found that school districts, more often than little municipalities in the Retzel counties, the school districts will often opt to pursue Mictel instead. And yes, enforcement under Mictel is done through the county sheriff at sheriff sales. And then I guess we'll just talk a little bit more about the differences between the two statutes. Like Frank had mentioned, not everything is automatically taken through the Mictel process. There's no repository. So if it goes through the sheriff sale process and doesn't sell, it just continues to sit there in the name of the record owner. So historically, taxing bodies under Mictel have been selective in what they've taken through the process because it takes resources and time and money to put something through the sheriff sale. And if the owner's not going to come forward and pay, or it's not going to have a market at sale, you just wasted all that time and money. Land banking has certainly changed that because now properties that otherwise would have just sat and never been taken through the process will be identified by the land banks for acquisition. So it's been a great tool to get properties that otherwise would just sit there forever, vacant and blighted and making everything worse, to be able to get them into the hands of the land banks through this process. Mictel has a right of redemption. Retzel does not. The redemption period under Mictel is 3 months or 9 months. It's 3 months for Allegheny County, City of Pittsburgh, and the municipalities in the county, and 9 months for everybody else. And only after the sheriff's deed is acknowledged, only vacant properties cannot redeem after the sheriff's deed has been acknowledged. So only occupied properties after that point can redeem within that 3 or 9 month period. And then the process itself for getting properties to sheriff's sale is different. All right, so we have 2 options under Mictel. One is what is called the writ of shire faucis. That is the process that looks most like a civil complaint. The writ is filed. It is like a complaint. It is served like a complaint with personal service. If no answer is filed, the default judgment can be taken, and then you execute on your judgment. The alternative method is the petition for rule to show cause. Petition is filed, a rule is issued. Everyone with an interest in that property gets notice up front with the SIFA. That's what we refer to the writ of shire faucis. With the SIFA process, only the record owner is served with the complaint, and then at the time of execution, everyone with an interest in the property is notified at that point. The petition is more upfront notice. So you file a petition, a rule is issued. If no answer is filed to the rule, you appear at court and get your decree entered, which allows you to go right to sheriff's sale. So the petition process, you go to judicial sale immediately. With the SIFA process, it's usually upset sale, then judicial sale if there are no bids, although there is a mechanism for going right to the judicial sale first, unlike Retzel. So historically, Philly was the only taxing body using the petition process, but Act 4 of 2023 gave taxing bodies in Allegheny County, including the City of Pittsburgh, the option to use that petition and rule model. And we did that because we wanted to, we find, and our firm does both methods, and we have found that the Philly model is much quicker and efficient. And I always I don't have my visual aids with me today, but so this might be a file for a SIFA, right? Lots of paper, lots of steps. And then this is more like the example for the petition and rule model. It's much more straightforward and less kind of cumbersome. It takes less time. We found that with the petition process, we can get properties to sale under a year. And it can be a little bit less expensive because you don't have to attempt personal service first or go back with multiple motions for alternative service and things like that.
That's great. Thanks, Mandy. So I'm going to talk a little bit about I'm going to talk a little bit about some examples from land banks across Pennsylvania. And I want to just start out by saying that land banks in Pennsylvania are working very hard with limited resources to transfer these properties to new owners who are going to invest in those properties and build and revitalize in their communities. So hats off to all the land banks in Pennsylvania that are doing that work. The priority bid is one tool that allows them to do that work because there is no state funding for land banks. Land banks must generate whatever revenues they can from whatever sources they can to pay for their operating expenses and their transaction costs. And some of the resources that land banks have really found to be beneficial are the fair grants through PHFA, some of the local share account grants, and other state grants that have opportunities for land banks to apply and get some resources in order to do their work. There are a couple of options under the land bank statute that help land banks get funding. They can keep the proceeds of any sales, and there's the 550 tax provision that requires after, I don't want to say requires, allows the taxing bodies and the land bank to enter into an agreement whereby for 5 years after a property is transferred from the land bank to a new owner who pays taxes, for those 5 years after that transfer, the land bank gets 50% of the taxes collected. That provision under the state law has allowed land banks to generate some small portion of revenue, so that's been helpful. So I want to share with you a couple of the examples and show you how properties that have been acquired at tax sale have actually been redeveloped. One of my favorites is the Pottstown Land Bank in Montgomery County. Now, here we go. So this property is the after picture. Pottstown Borough Land Bank. Well, first of all, Pottstown is a small borough in Montgomery County in southeastern PA. Its population is about 23,500. It received one fair grant and has, and I think the fair grant was for about maybe $120,000. And with that grant money, they've done 7 or 8 properties, and this is just one of those properties. It was acquired at judicial sale, sold to a local developer who put $133,000 in to rehabbing the property, and the property was transferred to a low moderate income family for home ownership. The way Pottstown Borough has been able to achieve its successes is through a strong partnership with the County Tax Claim Bureau. You'll see when you're looking closely at land banks that those kinds of partnerships are essential for land banks to be able to do the work that they've been tasked with doing. That is complex and difficult and often without funding. So they turn to all the partners they possibly can in order to get the outcomes that they're looking for. And this is one example of a jurisdiction that is under Retzel. This next one is an example from the Northeast PA Land Bank Authority up in northeastern PA. Its base is the city of Pittston, and the city of Pittston's Redevelopment Authority manages and administers the land bank. This property is acquired in 2019. It was sold to Habitat. The house was demolished and a new structure was built there. And the property is continuing to be maintained and is on the tax rolls. And this is one other example of land banks acquiring properties under Retzel through judicial sale and then taking that blighted property, which you can see from the before picture in the background, and turning it into an opportunity for low-income home ownership. This next one is from Westmoreland County Land Bank. Under the land bank law, land banks can acquire any kind of property. It doesn't have to just be residential, although most land banks focus on residential properties. Westmoreland County Land Bank has been very good at using the land bank in partnership with other county agencies to acquire commercial and industrial properties and return them to productive use. This is just one example of those properties. It's the old Fort Pitt Brewery in West Jeanette. The property was acquired at judicial tax sale in 2022. It had been vacant since the 1970s and deteriorating. The local government there was stressed, always trying to respond to incidences on the property, and they were anxious to see this property return to productive use. And right now, you can see from the picture, it says May 2025. The property is beginning, and it should be underway now. The next phase is its environmental assessment, and that assessment's being funded through an EPA grant. And again, this project included a number of partners, including the Industrial Development Authority and other agencies, local governments. All of those folks are involved in the development of these properties. Another example from Westmoreland County, if you want to see some more commercial properties, was the Jeanette Glass Factory, and then the old Monsoor Hospital property, which were other properties that were commercial properties, industrial properties that the land bank has taken and returned or is returning those to productive use through its powers. All right, let me get to the next one. Here we go. So the Tricog Land Bank is a multi-municipal land bank located in Allegheny County. The Northeast PA Land Bank, which I talked about a minute ago, is also a multi-municipal land bank, which means a group of municipalities joined together and agreed that they would form a land bank and would work together to operationalize that land bank. The Tricog is one of those multi-municipal land banks, and here you can see two examples of the nonprofit partnerships that TCLB has really focused on in its efforts to bring more affordable housing to its residents in the jurisdictions that it serves. These properties were acquired at Allegheny County Sheriff's Sale, their judicial sales, in the 2020 and 2021. Rebuilding Together Pittsburgh acquired those properties from the land bank, and the homes were renovated and now they are occupied. These are examples of from a MICDL jurisdiction. And TCLB, Westmoreland, Northeast PA Land Bank, TCLB, they're great examples. And if you want to see how they're operationalized, their websites are very transparent, very helpful, with lots of resources that share more about the stories of the work that they're doing. So one more, this is from a Retzel jurisdiction, and again, another partnership with a local nonprofit housing organization. This is the City of Lancaster Land Bank, and this property was acquired by the land bank at tax sale in 2020. It was sold to Habitat for $15,000, and then Habitat invested over $100,000 and sold the property to new homeowners for $125,000 in 2022. And when these properties are taken care of, the neighbors rejoice at the elimination of blighted properties, some properties that have been blighted and deteriorating for decades. And this is just one more example of land banks partnering with local agencies, nonprofits, other levels of government and government agencies in order to advance and increase the supply of affordable housing in Pennsylvania. So I want to turn the discussion over now to ways that we are protecting vulnerable homeowners and their equity. The Center for Community Progress has many resources on its website, and I will share those when the Housing Alliance shares the slides out. I can share those with everybody. One of them has to do with tax delinquent processes across the nation, and that was written by Kim Graziani, and it's really helpful in showing some of the efforts being made to make sure these tax foreclosure processes are fair and equitable. And then Matt and the Center for Community Progress did great briefings on this case that Matt's going to describe a little bit for us, Tyler v. Hennepin, which came out from the U.S. Supreme Court. So I'm going to turn it over to Matt now and ask Matt if you will just talk a little bit about that case and how land banks are responding to it.
Sure thing. Hopefully everybody can hear me. I had a little bit of technical difficulty earlier. And thanks again to all of you who are doing this work, and Frank and Mandy and Winnie for sharing some of the great things, the ways you've, coordinated land banking efforts with the tax foreclosure system in Pennsylvania, which admittedly is a bit on the complex side, a couple of different things. I get the chance to work with a lot of states on these issues. And I think the one thing that I want to be clear on is that, as a national organization, we're often trying to talk about themes and things like that that are running across different states. But when it comes to tax foreclosure, it's really difficult. Right? There are 50 different states, and within each state, there is a different delinquent property tax enforcement scheme within each state. Scheme might be the wrong word there, but the framework in each state. And then from jurisdiction to jurisdiction, like we've seen here in Pennsylvania, it can change, right? Using either Retzel or Michtel. New York is very different, for example, and some jurisdictions can opt out of state law entirely and do their own thing. And so it's just, you have to keep in mind that it looks a little bit different all over. And so what's really interesting is I'm going to start, Winnie, with the Tyler versus Hennepin County case, which a opinion was issued by the U.S. Supreme Court in May of 2023, right? And that was the first time in many decades, really, that the Supreme Court had really waded into tax foreclosure. They were for many years content to just let states sort of set up their own system and do it. And historically, the only real time that the federal courts would weigh in was when a local jurisdiction was doing tax foreclosure and didn't provide due process, right? You didn't meet the minimum due process requirements. But in 2023, that changed a little bit. And the Supreme Court saw a case out of Minnesota where they felt it was appropriate to apply a takings analysis to that case. And so very briefly, what happened is there was a woman who was tax delinquent on her property in a condo in Minneapolis. She owed about $15,000 over 3 years. She was given a lot of opportunities and notices to pay, so due process was there. And then the way the Minnesota statute worked is at the end of all that time, and it ended up being about 5 years from the date of delinquency till the end of this process. At the end of this process, the Minnesota statutes allowed the county to sort of take the title to the property, and then several months later sell that property. Right. And they didn't have a process where if they sold the property and there was any excess above the amount owed, which was about $15,000, they didn't really have a process for Ms. Tyler to go and claim any of the excess proceeds. Right. So they sold the property about a year later for $40,000, and Ms. Tyler sued for that difference in the $25,000. Supreme Court said, yep, when a local government sells and retains that surplus, if you will, that is a taking of this person's right to that sort of excess value that was in the property, right? And there was a whole lot of conversation around home equity theft, right? That's how the lawyers for Ms. Tyler sort of framed it, like this was a theft of equity. And there's a lot of great points that were made there, right? However, so it does complicate things in a lot of jurisdictions, right? Which is, if you do a tax foreclosure, is there an opportunity, if the property is, sold at a public auction, right? Is there an opportunity for the owner to access any of that excess value or those excess proceeds that were made? And that's really what the Tyler case stands for. But as we started to look at it, Center for Community Progress, what we realized is, and I think this is probably true for most of you that are familiar with these systems on the call, right? If a property gets all the way to that point, there's so much in terms of value and equity within that property that's already been lost, right? And so if we're really going to talk about protecting home equity or protecting people's home equity, there are so many different things that we can do earlier in the system before it gets to that foreclosure piece. And so we've kind of looked at states that have been reforming in the wake of Tyler versus Hennepin in two functions. One, do everything you can at the front end to make sure it doesn't go down that path. Make sure your homeowner exemptions are right? Give them all the access. Like, are we really giving people the chance to stay in their homes? Are their assessments fair and equitable? Are you looking at those? Do we have tax freezes for legacy homeowners or senior citizens or things like that? Are there additional tax credits or things you can do to reduce that burden? Are we making it easy enough to pay? Right? I know that I think it's done differently in different places, but monthly payments are huge, right? It's really hard for a lot of people to do lump sum payments, especially those people that no longer have a mortgage on their property and have a mortgage company helping them with escrow. making multiple language, payment plans, all of these things, helping, just talking to people and helping them understand what their options are before we go all the way down this path. So I think that's a really key part of Tyler versus Hennepin County. Now, that's not all land banks necessarily can do a lot of that. Land banks exist on the back end, right? And so as jurisdictions have been looking at this, I would say in the wake of Tyler, at least 12, and it's actually much more jurisdictions or states rather, have reformed their state laws around property tax foreclosure and stuff. Most of them have done so and introduced something like a public auction process, right? Where you're taking that property to public auction, you're submitting it to some sort of public process where you're going to auction it off and you're going to solicit bids to establish some kind of a market or a value on the property. And if at that point there's any extra that's generated from that, it can be made, there should be a process in place for the former owner to be able to claim that. Right now, obviously, you know, both Frank and Mandy talked about several points at which owners can access that, you know, particularly as I'm looking at the Retzel one right now, just in front of me, right, there's a, you know, an opportunity for a first auction, right, where people are welcome to establish and get a bid. And there's a process in place where if there's an extra generated, that can go back to the former owner, right? So that's what a lot of states, though, didn't have in place and have been reforming it to do. So Massachusetts, right, has a system similar to that, to what you saw in Minnesota in the Supreme Court case. And they implemented a policy to allow for the sale of the property at the end. They did it a little bit differently, but it's worth exploring. But also states like Maine, Nebraska, Illinois, Colorado, Arizona, Idaho, Louisiana, Minnesota, of course. We get into a little bit more depth on how each of these states have done some reform. But the key aspect of that is there needs to be some kind of a process in place for homeowners to be able to access some of that excess value if there is anyone. And most commonly, jurisdictions are looking at things like public auctions. So how are land banks responding to that? Right. I'm noticing we're coming up a little bit on time too. So Winnie, I'll take a pause right here and see where you want to go to, if you want to take them to the next slide or not.
Yeah, so maybe we could have Mandy share a little bit about what the land banks in the MICDL jurisdictions are doing because of the fact that they're not having the upset sale first.
Sure. So Philadelphia passed an ordinance implementing significant opportunities for the property owners to notify the land bank both before and after the sheriff's sale. If they do want to pre-sale, they can request that the property actually be subject to public bidding at the sheriff's sale before the land bank can acquire it. And then post-sale, they also may redeem the property by notifying the land bank that they want to get the property back and by paying the price that the land bank bids for the property at sheriff's sale. So the Philadelphia Land Bank started sending these new notices, I believe, for the July sale, and it's been a significant amount of work getting those notices out to everybody, and on the timelines that were set between the Philadelphia Land Bank and the sheriff's office. So it's a lot of work. Here in Allegheny County, we are using the petition model for the land bank properties for sheriff's sale. But in addition to the normal petition noticing that we send out, we also have we call it an equity preservation notice that's provided to the property owners, similarly giving them an opportunity to contact us and request the public bidding before the land bank can acquire the property. We have not had anyone actually contact us. We have had people contact us in response to that to get on a payment plan or make payments, but not to actually request that that there be public bidding before the sheriff's sale, at least in Allegheny County.
So that is so helpful. Thank you, Mandy and Matt, for sharing that. And I know we are getting close to time. So Chris, maybe I'll ask if you would jump in with some of the questions that we received.
Absolutely. Okay, so the first one that I would like to field to you all is repository land perpetually available for sale throughout the year or can counties keep the sale window closed except for 1 or 2 windows per year?
I'll tell you what my experience has been, and then I'll ask Frank if you want to weigh in too.
Yeah.
Some places where I've worked, they do a pause for periods of time, especially if they have a judicial sale or an upset sale coming up. So they have the ability to pause the timing when repository sales can occur. That's been my experience.
Yeah, that's exactly my understanding as well. It's that simple. They have the power to pause it. They're holding it in trust.
And then for repository sales too, remember, all 3 taxing bodies have to sign off on the sale. They have the
Right.
ability to object, so you need to get all 3 to agree to any bid that's received for your repository list properties.
I do have a follow-up question about upset sales. Does upset sale also include HOA fees?
I guess, does it include, would it get, it would not get rid of properly recorded, like judgments due for unpaid HOA fees. If they're statutory liens, it wouldn't get rid of them either.
Okay, thank you, Frank. I have another question. How much notice must the land bank provide the TCB when using its priority bid? I also have a follow-up to that. So, what are the actual logistics of notifying the TCB for a land bank to utilize its priority bid? Is there a template or certain notice that should be used?
I would love to answer that one. A best practice would be for the land bank and the tax claim bureau to have something in writing that sets forth the procedures and processes that they're going to follow for the land bank to exercise its priority bid. Some places are very formal and they want that in writing and they require strict compliance with it. Other places are more informal, like in Pottstown, the process is very informal with email communication from the land bank to the tax claim bureau. Here are the properties we want, and then that satisfies notice. Other places want something more formal. So depending upon the community where the land bank is located, you're going to figure out what works for you. And remember that the tax claim bureau has to be an agreeable party to that. So you want to try to collaborate with them. And what was the first question again, Chris?
The first question was how much notice must the land bank provide the TCB when using its priority bid?
Yeah, I think that really is dependent on the agreements they make. What have you seen, Frank and Mandy? Nothing
Well,
uniform.
it's dictated, like, they don't have to accept your bid, right? So it
Yeah.
is just however you work it out with them.
And here in Allegheny County and Philly, we've worked with the sheriff's office to kind of come up with that process, what announcements are going to be made. In Allegheny County, we send the sheriff's office an email prior to the sheriff's sale saying, here are the properties that which land bank is intending on acquiring at the sheriff's sale.
I have another question. Are mortgage holders allowed to bid in a judicial sale?
Sure, and they will. They'll come and bid up their interest at the very least. So, and remember, the judicial sale is the first time Retzel required, and I'm speaking under Retzel, first time it requires them to be noticed. It's the first time they could lose their interest.
We have found here that the mortgage companies will typically pay the taxes to stop the sheriff's sale rather than bidding.
I have one last question. Do all PA counties have a land bank? How can one locate which ones are active in your county?
Well, all counties do not have land banks in Pennsylvania, and I would say to take a look at the Housing Alliance of Pennsylvania's website. They have a Pennsylvania land bank map that you can access that shows the locations of all 39 of the Pennsylvania land banks. Some are standalone land banks at the county level, at a municipal level. Others are multi-municipal land banks, and then you have others that are redevelopment authorities that have been designated as their either county or city land banks. So there's a lot of different variables, and that is because our state land bank law is pretty flexible, and it allows for communities to figure out what system is going to work best given their goals and the culture of their community. So it's been different all across PA. Matt?
Yeah, I'm just going to shout out to the Housing Alliance of Pennsylvania's website, by the way, which is great. It has so much different stuff out there. But we also have a national land bank map if you want to do it. And to the extent that you want to learn more about how other land banks are doing things elsewhere, sorry, Winnie, I had to throw this out there. We're actually coming to Pennsylvania next year for our National Reclaiming Vacant Properties Conference in September 2026. So there's an opportunity to learn more about like how some of the things that people are doing elsewhere can be transferred, can be replicated here in Pennsylvania as well. So I just wanted to make sure that that was out there. My comms team would kill me if I didn't say something.
No,
Matt,
that's
do
great.
we-
And
Go
do
on,
you
Winnie.
want to
I'm
say,
sorry.
Chris? I was just going to say the Homes Within Reach conference that Chris talked about at the beginning. On Wednesday and Thursday, we have 8 sessions that relate to blight and land banking. So if you want to really dig deeper into any of these topics, I would encourage you to register for that conference as well. But the RVP conference, I've attended a number of those in the past, and you leave there so energized because you've learned from all of the top practitioners across the country how to do this work. And it's a great conference.
I am gonna put in a link to the Homes Within Reach conference. Matt, I was gonna ask you, do you have a link to the conference? If not, if you don't have it on hand real quick, we can also include it in the materials that we're sending out to everybody within a week of this webinar. Hold on, I accidentally sent that link to the hosts instead of everybody. But yes, I've dropped a link to the Homes Within Reach conference, and yeah, and any other links that we'll be sharing, including the presentation and a recording of this webinar, will be sent to everyone who registered within a week of today. Yeah. With that, we're at 1 o'clock. I want to thank Winnie, Matt, Mandy, and Frank. Thank you all for such an engaging webinar and for sharing your knowledge with our audience today. Thank you all and have a great rest of your day.
Thanks.
Thanks, everybody.
Bye, everyone.
Bye-bye.